You probably know someone like this. They drive a car that's maybe 7 years old. They never talk about money. Their house is nice, but not flashy. They don't wear designer labels. They don't post vacations on Instagram. And yet, somehow, when you're around them, there's this quiet, unshakable sense that everything is going to be fine for them. Always. You just can't figure out why. Here's the uncomfortable truth. The way most Americans display wealth and the way most wealthy Americans actually live are almost completely opposite things. The culture sold us a picture of rich, the watches, the cars, the restaurants, the outfits, and a lot of people went broke trying to buy that picture. Meanwhile, the people who actually built generational money, they've been hiding in plain sight. This video is not about judging people for how they spend. It's about understanding a pattern. A quiet, consistent, almost boring pattern that shows up again and again in people who have serious money. Once you see it, you cannot unsee it. Let's go through all 15 signs. Sign number 1. They never talk about how much things cost. Not in the way you'd expect. When someone is quietly wealthy, they don't announce sales they found, they don't complain about prices at restaurants, and they don't brag about deals. But here's the flip side. They also don't flinch. You mention a vacation, they don't do the mental math out loud. You split a check, they don't hover over who ordered what. Money, as a topic of stress or performance, just isn't present in how they talk. That absence is the signal. Sign number 2. They own real estate that nobody knows about. Not a mansion. A duplex in a city they visited once in 2011. A small commercial space they bought with a partner 15 years ago. Maybe a family cabin that was technically an investment. Quietly wealthy people tend to accumulate property over decades in ways that never come up at dinner. According to Federal Reserve data, real estate remains one of the top 3 wealth-building vehicles for American households, especially for families in the top 20% of net worth. But you'd never know it from the conversation. Sign number 3. Their car is paid off and boring. There's a reason so many studies on millionaire behavior, including the famous research behind The Millionaire Next Door, found that the most popular vehicle among American millionaires was not a luxury brand. It was a used American or Japanese sedan. A paid-off, unremarkable car is actually a financial signal. It means no monthly payment. It means they're not leasing identity. It means they understand the difference between an asset and a depreciating status symbol. The flashy car often belongs to someone in their 30s trying to look like they've arrived. The boring car often belongs to someone who already has. Sign number 4. They talk about time, not money. Pay close attention to what people protect. Quietly wealthy people protect their time aggressively. They'll leave a party early without apology. They won't take a meeting that doesn't make sense. They'll hire someone to do something they could technically do themselves, not because they're lazy, but because they've already done the math on what an hour of their time is worth. When someone values their schedule more than their image, that's usually a person who's thought seriously about money and what it actually buys. Sign number 5. They have accounts you've never heard of. Not offshore, not illegal, just boring institutional stuff. A brokerage account, a self-directed IRA, maybe a health savings account they've been maxing out for 12 years. The average American has a checking account and maybe a savings account. Quietly wealthy people tend to have money in multiple places, in multiple structures, for multiple purposes. They understand tax-advantaged accounts the way a chess player understands the way a chess player understands the board. They're always thinking 3 moves ahead. Sign number 6. They are extremely calm during economic chaos. The market drops 400 points and they shrug. Inflation spikes and they're mildly inconvenienced but not panicked. A recession is coming and they're curious maybe. That calm is not emotional detachment or ignorance. It's the specific psychological security that comes from having a financial buffer. Behavioral economists call this the wealth effect. The way having assets fundamentally changes your relationship with fear. When someone doesn't spiral during financial turbulence, there's a good chance they've built something that insulates them from the worst of it. Sign number 7. They buy quality once instead of cheap things repeatedly. This sounds simple. It is one of the most quietly powerful financial behaviors out there. A pair of boots that lasts 12 years instead of 3 pairs of cheap ones. A kitchen appliance from a serious brand instead of 3 replacements from a discount store. The math on this compounds over a lifetime in a way most people never calculate. Quietly wealthy people think in decades, not months. They make purchases like investments. They ask what the real cost of ownership is, not just the sticker price. Sign number 8. Their generosity is quiet and specific. They don't announce donations. They don't post charity receipts. But they'll quietly pay for something for someone who needed it, set up a college fund for a niece, or cover a bill without making it a moment. That kind of generosity, specific, private, without performance, tends to come from abundance, not from a place of scarcity that needs social reward. There's something almost invisible about how quietly wealthy people give, and that invisibility is the point. Sign number 9. They read more than they watch. This isn't a judgment on entertainment, it's a pattern. Researchers who have studied the daily habits of high net worth individuals consistently find higher rates of deliberate reading. Not scrolling, not passive consumption, but actual reading of books, reports, and long-form analysis. Warren Buffett has said he spends roughly 80% of his working day reading. Charlie Munger called reading the foundation of thinking. The quietly wealthy person at a party isn't the loudest one. They're the one who's been reading something you haven't heard of yet and has very specific questions about the world. Sign number 10. They have a lawyer and an accountant they actually use, not just for tax season, for everything. The quietly wealthy understand that the legal and financial architecture of their life matters as much as the money they earn. Trusts, wills, LLCs, tax strategies. These aren't just for the ultra-rich. They're tools that anyone with serious assets learns to use over time. If someone casually mentions they spoke with their estate attorney last month, or they're restructuring something for tax efficiency, that's not showing off. That's someone who treats their finances like a system, not an afterthought. Sign number 11. They don't talk about their salary, but they might talk about equity. Here's a shift in language worth listening for. People who work for money talk about their paycheck. People who are building wealth talk about ownership. Equity in a company, stock grants, a stake in something, a piece of a deal. The salary is a flow. The equity is a reservoir. Quietly wealthy people have usually made a conscious shift from trading time for income to accumulating ownership of things that grow without them working every hour. When someone mentions ownership casually, without showing off, that's often a very significant tell. Sign number 12. They live significantly below their means, and it shows only if you look closely. This is the central mechanic of quiet wealth, and it deserves a moment. The gap between what someone earns and what someone spends is the single most important variable in whether they accumulate wealth. Not the income level, the gap. Someone earning $250,000 a year and spending $240,000 is financially fragile. Someone earning $90,000 and spending $55,000 is quietly building something serious. The modest apartment, the simple meals cooked at home, the vacations that are road trips. These aren't signs of deprivation. They're signs of discipline that has compounded over 15 years into something real. Sign number 13. They invest during downturns instead of panicking. This is where the quietly wealthy separate from the crowd in the most dramatic, measurable way. When the market dropped roughly 34% in March of 2020, millions of Americans panic sold. Some of the biggest single-day buying events in ETF history happened in that same window, and the buyers were largely institutional investors and high-net-worth individuals who understood that downturns are sales. The person who is quietly wealthy has usually been through enough cycles to know the time to buy is when everyone else is selling. Sign number 14. They talk about the future in specific, concrete terms. Not vaguely, not someday I'll retire. Specifically, a number, a year, a structure, a plan. The quietly wealthy person doesn't fantasize about the future. They engineer it. They know roughly how much their portfolio needs to be to generate the income they want to live. They know what the sequence of returns risk is in early retirement. They've thought about healthcare costs before Medicare kicks in. This specificity is a dead giveaway. Vague optimism is free. Specific plans cost thought, time, and usually money. Sign number 15. They seem impossibly unbothered by things that stress everyone else out. This is the last sign, and it's the hardest to quantify but the easiest to feel in a room. The job layoff that would destroy most people. They're okay. The unexpected medical bill, absorbed. The car breaking down, the roof needing replacement, the family emergency. They handle it without drama because they have a buffer, and then a buffer behind the buffer, and probably a buffer behind that. The financial term for this is liquidity, but the human experience of it is just quiet, unshakable calm. They're not better people, they're just insulated from the specific chaos that financial precarity creates. Now here's the part that might sit with you uncomfortably. Most of these signs aren't about income. They're about behavior, patience, and time. The research on American wealth accumulation, including data from the Federal Reserve's Survey of Consumer Finances, consistently shows that income level alone is a weak predictor of net worth. What predicts net worth is savings rate, investing behavior, asset, accumulation, and time in the market. A school teacher who's been maxing out a Roth IRA since age 24 and owns a small rental property can quietly accumulate more real wealth than a high-earning professional who spends every dollar they make trying to look like they've made it. The performance of wealth and the reality of wealth are two very different things in America. One is expensive and exhausting. The other is boring and quiet, and over 20 or 30 years, enormously powerful. The question worth sitting with isn't whether someone else is secretly wealthy. The question is what signals you're sending, and whether you're building something real or funding the appearance of something that isn't there yet. That's worth thinking about. If this video made you look at the people around you a little differently, or made you reconsider something about your own financial habits, share it with someone who needs to see it. Leave a comment below with the sign that hit closest to home. The responses on these videos are always more interesting than you'd expect. Like the video if you found it genuinely useful, not just okay. And subscribe if you want more content that treats you like an adult who can handle the truth about money. New videos drop every week, and they're always worth your time.